Hello, everybody. We're starting the webinar at this time. Just a quick systems check before we get going. Give me an okay in the chat box if you're hearing me clearly and seeing my screen all right. All right, great. I've got enough responses. Looks like we're ready to go. Just a quick shout out as we get going to anyone who might be joining us from our Friedberg partnership over in Canada. I know a lot of you folks have been starting to join our webinars. I had a graphic with the Friedberg Ava logo. I wasn't able to get to it. I had a little bit of a technical problem today, but that's okay. The graphic is not needed. You're still welcome. As we get going, obviously we're going to be covering technical analysis today with not just those from Friedberg, but obviously everyone around the world. Keep in mind there's always risk involved with any investment, with any trading that you're doing. That's obviously the case with trading Forex, CFDs, spread betting, and options as well. You can read the full risk disclosure statement on avatrade.com or avatrade.ca for those of you in Canada. Keep in mind that what we cover is not meant to be financial advisement, and that what we cover is meant to be educational in nature. And as we go through things, it's meant to build upon your strategy that you're either building or starting to build, and to help you improve upon things as you move along. Aruna, you're saying my voice is not clear. Is this the case for everybody? Type okay if you're hearing me all right, or if you're not, maybe I'll make some adjustments. Okay, seems like I'm 50-50 here. Well, okay, so I've got a new headset that's working off of Bluetooth, and perhaps it's not as clear as the other headset that I was using. So what I'm going to do, let me pause for a moment and switch headsets. So I'll be right with you. Just hang tight and we'll get going.
Okay, testing, guys. You probably can hear me more clearly now. Everything okay with the audio? Okay. Obviously, I need to make some adjustments. I got actually a much better headset with Bluetooth, but it needs the sensitivity adjusted on it. So we'll move forward with this headset. You may hear a little more background noise with this headset, which was the point of trying to eliminate the background noise, but I don't want to eliminate my voice. So we may just have to put up with a little background noise. Okay, so let's move forward then. And keep in mind, in case nobody heard me before, or if anybody missed it, obviously all investments have risk, but quite obviously we're here because they also have the potential for nice profits, and that's what we're going to look at, are some ideas and strategies using technical analysis as our focus to move forward with hopefully some educational perspective that will improve upon your trading strategy, and certainly not to be taken as financial advisement. So as we move forward, there's some things to keep in mind with your technical analysis. And so basically, technical analysis, for those of you that might be really new to things, involves looking at the historical data on the chart and coming up with patterns, repetitive movements that help you maybe predict what might happen in the future, obviously with no guarantees, but many times what happens in the past gives you some insight as to what could happen in the future. There are different ways of doing technical analysis. We'll tend to lean more on manual methods of technical analysis, that being drawing our own price levels on the charts, what we might call support and resistance levels, drawing our own ranging areas, our own slopes, our own trend lines, all of those things, taking into account the current fundamental news situation as we do it. We won't lean much on indicators. Indicators are nice and they can be part of a strategy for sure. On occasion, we do cover indicators of different types, but mostly we'll lean on the manual methods as they can adjust to the market conditions and the fundamental news that's out there more readily than an indicator can. And certainly don't wait to the end for questions and comments. You can jump right in with any questions or comments as we go along. So let's take a look at some of the charts, and we'll take a look at my demo account here, and we'll look at, in general, what's crude oil doing today. We're looking at 1 hour candles here, and what it looks like is the candles have been going strongly uphill today. Okay, these are 1 hour candles, so this movement here is basically today. All right, if we go back, here's today, this is this morning, okay, all the way back until we get back a little bit further and we say, okay, we're going into Friday's close right back over here. Okay, so this is the first. So the market opened right around this area right here. Okay, it opened with a little bit of a spike up, pushed down, and then came running up. Okay, that was the general movement today. So a downward push and then a strong run up with crude oil. And the same would look the same with Brent crude as well. We'll take a look at the fundamental news as to what was going on here. Why did oil make such a bull run up? If we zoom in a little bit closer on the 15-minute candles, we can see that it formed a bit of a support down here before making the run up. Okay, support, 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 and a strong run uphill. And looking at it as 15-minute candles, it doesn't look like necessarily we're into a downtrend yet. If we look closer, we can see the low points are still getting higher on the 15-minute candles. The high points still getting higher, and it looks like it's trying to push up again right now with that bullish looking green candle right here. So Ebert, are you saying you still can't hear? Everyone said it was much more clear. Okay, great. Everybody's good. All right, so yeah, we can see bullish movement here, and it's still trying to pop up. So you know, market moves right now look like we've got a lot of buyers, and it looks like the ceiling is up here someplace that was established today. So looking like this could still push upward according to the current uptrend. And if we look at gold, what do you think's happening to gold if oil's surging up? What do you think happened to gold in the past 8 or 10 hours? Yeah, a lot of you are saying gold was pushing down. A couple of you are saying up. Let's take a look at what gold did today. Okay, so if we look at 15-minute candles, what happened today? Downtrend. Okay, some of you said it's pushing up, but what you mean is in the last couple hours it's pushing up, right? These are 15-minute candles. The last couple hours it pushed back up a little bit, recovering some of the drop that it had today. But yeah, Vermuna, I'm with you. It was bearish today. Gold was bearish. Why? Because there's what two countries are having negotiations about trade negotiations that are looked at as maybe being positive right now? Why would that help push gold down and oil up? Well, it would be good for the two major economies and thereby the world economically if they reach a trade deal yet. Aruna, you're the first one to put it. China-US trade deal. They haven't reached like a huge deal for sure, but they're saying at least phase one, maybe involving a lot of agriculture, eliminating increases in tariffs, potentially. Sounds like there's been a lot of good news coming out starting last Friday through the weekend and then leaking into today, that they've reached maybe a potential deal, what they're calling phase one of 3 phases. Okay, so that's viewed as positive by the markets. That's viewed as then good for oil. And if people are viewing positive things for the markets, what happens to gold? It tends to drop because gold's a safe haven when people are nervous. When they're not nervous, they buy into things like stocks and indices and oil. And so it makes sense that gold did the opposite of what we just looked at oil doing. So market move, what maybe is a potential move to do, high point, it dropped, low point up, high point, it dropped, low point up, high point, it's starting to drop again. Doesn't mean it has to keep dropping, right? But in general, if you believe in the fundamental news today as being positive, it looks like this is still a downtrend. The last the last low point was lower than the prior low points down here. So thereby you might assume the next high point should stay lower than the last high point. And it is starting to drop, okay? Doesn't mean it has to continue, but that's the current technical analysis, right? A high point in a current downtrend with fundamental news kind of to explain why that's occurring. Now, so what do you think happened to the major indices today? What did they do starting out the day and through the day today? Yeah, they went up. Makes sense. If people are leaving the safe haven, they're buying oil. It makes sense. They might also be buying into the Dow Jones, which if we go, let's go to the 1-hour candles. What did the Dow Jones do today? Well, it went flying up, right? Okay, this was Friday. This moves into the end of Friday here, and this goes into today. The third, meaning Sunday night / Monday morning, starting right here. So today continued. I'll start this line right where today started, right here. Continued the uptrend from last week. Why did it surge up last week on Friday? Same thing. Good news leaked out about potential deal between U.S. and China. Okay, and if you're paying any attention to some of the earnings numbers that have come out, some other news that's been leaking out, there's actually been some good economic news as well out of the U.S. So that's helped to push markets up also. So we've been seeing new highs with major indices. We've got the Dow Jones pushed up. We've got the NASDAQ, same thing, went flying up. This was an easy move today, everybody. Feeling the momentum when the market closed Friday, seeing the momentum continue when the market opened after the weekend, early morning this morning, and seeing continued articles coming out, which we can take a look at right now. Continued articles that came out. This was updated an hour ago, but these articles were coming out much earlier today about Wall Street going towards record highs, about positive news on energy and a tech boost. Okay, they say tech boost. They're talking about companies doing well. Gains in technology and energy shares help push Wall Street up. Record highs, positive news. They're talking about positive news again here between U.S. and China. And it doesn't really matter what source you're looking at. Could be investing.com, could be Reuters. You're seeing similar news. Okay, positive momentum. And so that was predictable going into the weekend, by the way, on Friday. And many traders got in expecting the markets to gap up or push up as the markets open today. Many traders got in even late on Friday after a lot of the movement already occurred. And if we take a look, even if you got in late on Friday on some of these moves, say in this area here, look how much you still profited going into today as it pushed up. And then finally it started to consolidate and move sideways here today. So very easy to read. What sort of technique could we have used here? What sort of technique could we have used here? If I take a look here, let's get rid of some of these lines. Simple technical analysis strategy. If I'm looking for a breakthrough strategy, here's my resistance point, resistance, resistance, resistance. It went above and dipped back below. If I'm waiting for this to come back above the resistance, that happened already on Friday. Okay, you see that? So if you got in today, earlier today, seeing that, hey, the good news was still holding, then you certainly could have gotten in here when the market opened here. Okay, I'll mark another line. The market opened in this area here. Okay, so you could have put your stop loss back below this old resistance level, which is support down here, and rode the momentum up until about now when the momentum kind of started to go sideways. Okay, so this is an example of if you didn't get in on Friday when this broke through the resistance here, you could have even gotten in late this morning when the markets opened. I say this morning, it depends your time zone, could have been last night, and still had a good deal of rise. Even if I got in when the markets opened Sunday night / Monday morning, could have gotten in at 81.70 and still had 40, 50 points rise on the NASDAQ. And, you know, if we're looking at like the Dow Jones, if we're looking at where could you have gotten in late, even if you missed this big rise on Friday, and you got in when the markets opened right here today, right there was the market open today, that line. Even if you missed all this movement Friday, and you see the markets open, they start positive, you could have bought in. And we're talking a rise from 27, even if you got in really late, 27.3, all the way up to 27.420. Okay, so easily 100 points gained still, even if you got in late. Just by paying attention to the news over the weekend, and when the markets opened, you could have went with the fundamental news, looking at the technical analysis, knowing that there was a breakthrough on the resistance here, and breakthrough on Friday. You could have put your support level just below that breakthrough mark, and took a shot with a relatively small risk below the support, and it never looked back today. It kept climbing. Sure, it consolidated. You could have already been out. Aruna, I'm looking at your question. NZD USD. Okay, you're saying NZD USD moved down. So let's take a look. Let's pull that up. I don't mind. Well, before we look at the NZD USD, let's look at the 15-minute candles. You see the consolidation sideways, and you see a bit of a support level now is formed. Okay, was resistance here. This broke through this mark today. Support, support, support. Now it's not very long-lived support, right? Only going back several hours back here to earlier today, but it certainly looks like it's holding a bit right at this level around 27,365. So you have a couple options with this type of support level, right? You could say I'll buy up off of this support thinking it could push back up. This would be a scalping move to push back up towards this high. So you could buy off this support, and if it gets somewhere up near this high that it reached earlier today, you could take profit for a scalping type move. Your stop loss in this example could be just below that support, not risking much, right? If it breaks below the support, you get out. Small risk for about 3 or 4 times potential profit to the ceiling already established today for a small scalping move. That would be a market move, okay? Obviously, not everyone has to like that style of trading, but it's a potential move that makes sense technical analysis-wise. If it does break below this support, then you could be looking at a sell stop potentially down to the last support level, which is this line here from where it opened today. Open down here at this support level. This would be a sell stop move if it broke the current support it's on to go down and scalp down to this next support level. Okay. Some people don't like to go against the market news. The market news is more positive from what we looked at with the fundamental news. So many of you may be looking to buy up off the support if you like that fundamental news, and a risk management strategy could be a stop loss just below that support. Certainly, I'm not telling you should buy off this support. It could break, but technical analysis wise, it looks like something that would make sense to do if you're scalping. Okay, and you certainly, if you wanted to wait and see if it breaks this support, you could have a sell stop down here. And you don't have to try and guess the market, by the way. You could have both. You could be making money if this pops up off this support, and also be prepared in case it breaks it with a sell stop. So that looks promising there in terms of the potential movement that could occur. And if we look at the S&P 500, it sets up the same way. You've got support level here, support, 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 support. Looks like a decent technical analysis strategy to go up off this support with a market move, shooting for a scalp if you're scalping to this high that was already established today, with a stop loss just below the support for a limited risk. And if it breaks below that level, then maybe you've started a downtrend with a potential sell stop just below that support as a pending order prepared. Okay. Type yes if you understand how to do pending orders. I'm mentioning sell stops. If you're confused by that, I could show you real quick. Sell stop is simple. It looks like most of you understand the sell stop. Market execution, you can switch to pending order. Then from pending order, you can pick the type. Sell stop, sells from a lower point. You could program it that if it breaks the support and hits a certain spot to sell. Basically, you're waiting to see the support broken to give you confirmation that you think there will be a downtrend, right? Rather than guessing. You're waiting for the support to be broke. Then you're saying sell, because now you have confirmation of downward momentum. In the meantime, you could have been buying up off this support and be in profit right now. Okay? Yeah, I just did. Some of you are saying show how to do the pending order. That's it right here. I could say, okay, if it drops to 30, 3070 or 3074, then to sell. So I could say pending order at price 3070. You put your trade size that you want, okay, whatever trade size you want based on your balance and your profit goals and your risk management. You can set the stop loss. Just if I'm getting in down here on a pending order, then my stop loss probably would be back above the support if I'm putting a stop loss, so that if it reversed and went back above the support, then I would say, okay, downtrend's over, maybe I'm out, limited risk. And so then you just put your entry price at whatever price you want for your entry point, and then you place it, and that puts your pending order down here. And if it hits that spot, it opens it as a live trade. Okay, very simple to set up pending orders based on entry points that if it reaches, you want to get in. And if it doesn't, then you don't. Okay, that way you can be selective. And you see the support level working kind of how you might expect it. As we're talking, it's bouncing up off this support. Already a little bit of profit could have been had on that. Now, as we go back to gold, we're looking at the same thing. We already looked at this potential drop. Again, you could have done market sell, and if it breaks above, where's your stop loss potentially here, is if it goes to a higher point than this reversal point on this down slope. Okay, we've got high point right in a parallel line. If it breaks back above that high point up here, then that establishes an uptrend and you might get out of your market sell. But right now you'd have already made money on the market sell. Since we looked at it, it's dropped about $1.10 per ounce. So if you were in on a one lot position, you already made $100, okay, on this drop. If you're scalping, you could already got out, or you could be waiting it out for further drop if you're more patient. But certainly there's something to this technical analysis. It reversed right on cue, just as we talked about it 10, 15 minutes ago, that it likely could continue the downtrend because we're seeing lower low points. Makes sense that it might reverse, even if just temporarily, from a lower high point. Okay, and you certainly could have taken profit already on this push down already. Okay, as a scalp move. Many are more patient though. If you were in on this, you could be waiting until it reaches near this last low point. It just depends how you view the market, right? If you view that fundamental news we looked at as really good, then you might stay with this move longer. If you don't view it as necessarily going to hold, then you wait for this reversal and you could have scalped the profit already. Okay, and these are just different styles of trading. And you know, why 2 out of 3 or 3 out of 3 of the moves we looked at, did they start moving the direction we thought they would right as we're talking about it? The fundamental news is on your side. You're using technical entry points that make sense. And so then more times out of not, hopefully you find success that way. Okay. And so let's take a look. Someone mentioned New Zealand USD. So let's take a look at it. Okay. NZD. Now, one good thing to do with your technical analysis, and let's look at it maybe 1 hour candles. Okay. Certainly, the New Zealand dollar gave up a lot of ground on the USD. Now, does it make sense that the US dollar would strengthen today with the news we already talked about? Would you think good news out of US-China trade negotiations would strengthen the USD? Most of you are saying yes. Yeah, it makes sense. It's good for the US economy. So it makes sense that the USD would pull the New Zealand dollar down today. That's one possibility as to why this occurred. Is it possible that something else is going on? You know, the US became like the largest exporter of oil in the world not that long back. Oil prices went up today. Shouldn't that be good for the USD? Christian, what's your question? You have to be more pointed. What is it you don't understand? Someone mentioned that the New Zealand dollar dropped against the USD today, and look, it did. These are 1 hour candles. So that means the US dollar strengthened. We're talking about potential reasons why the US dollar may have strengthened so much today. Does that make sense, Christian? Good economic news for a country, in this case the USD, helps to strengthen their currency typically. Okay, so if you have a more pointed question, I'll be happy to expand. Okay, so that's one possibility. US-China trade negotiations looking good. Tech stocks, they talked about good news out of the tech industry in the US. That could strengthen the USD. So we can think of multiple reasons. Oil climbing today, that's good for the US in general because the US creates a lot of oil. They export a lot of oil globally. It also could be a correction, correct, Aruna? There was such a climb here, it could just be a correction, but boy, it's down more than it gained in the whole last couple days. So there's something more going on than just a correction too, at least compared to the last couple days movement on the 1 hour candles. This is a really strong movement. So some things that are good to do. Let's look at fundamental announcements that happened today. So let's go to the main page on investing.com. And this is good to do in real time with a question I didn't even prepare for. Okay, I didn't expect a question about the NZD, which is good. This is a good example. So what happened on the economic schedule today? Anything with the New Zealand dollar or US dollar that seems would cause the New Zealand to drop? I don't see any major announcements on the New Zealand dollar today. Okay, we can look back, search through. Here's the NZD. This is just a general announcement here. Nothing major. The US had kind of flat announcements today. Nothing major. A lot of black, meaning not better than expected, not worse than expected for the USD. One that was a little worse than expected here on factory orders. Nothing showing here that should have strengthened the USD so much. So we're still leaning towards why would the USD strengthen? Leaning towards against the New Zealand dollar. We're leaning towards probably good news on USD China. Now, we also could take a look and see what's happening with other pairings, including the New Zealand dollar. So what did the New Zealand dollar do against, let's say, the yen? So let's take a look at that. Did the New Zealand dollar drop against everything? That's the question. New Zealand dollar, look at that. It looks the same as it does against the USD. So is it the USD that caused the New Zealand USD to drop? Or is it the New Zealand dollar weakening against, in general, against everything? And that's easy to answer. We just looked at NZD JPY and it's dropping also, right? So Aruna, yeah, in general, it's dropping. What Aruna said makes sense, right? There's a correction going on with the New Zealand dollar. That's a general thing. It's not just paired against the USD that it's dropping. It dropped against the yen. Let's look at GBP NZD. The pound went up against the New Zealand dollar, right? So again, the New Zealand dollar is weak against the pound. The pound climbed against it. If the New Zealand dollar is listed first, it's dropping. So no matter what the New Zealand dollar is paired against, it's weakening all day today. So it's something about the New Zealand dollar that's causing it to weaken. Okay, so it looks like, look at this. Look at this technical analysis. You see this was a resistance point here, and then it dropped off. Resistance and dropped off. Look where the pound is reached against the New Zealand dollar. Now, fundamentally, do you think the pound has reason to keep climbing right now? Is the Brexit situation settled? The political situation in Great Britain, is it like, wow, everyone's happy and the pound should keep climbing? Fundamentally, probably not. It's not the greatest situation fundamentally in the United Kingdom for the pound to keep strengthening. So do you trust this resistance level? Look, it hit the exact spot and dropped. It hit that exact resistance level and dropped. What's a potential market move here that might make sense? Yeah, the pound has reason not to like keep strengthening forever. The New Zealand dollar, if it was a correction, looks like the correction stopped, at least temporarily, right at this resistance level. It wasn't enough to break that resistance. So you could do a market move down off this resistance. It has huge potential if it retraces this climb even halfway. Huge potential to come down. And how much do you really need to risk? How much do you really need to risk, I should say? Where would be a logical spot if you like a sell move here? Where might be a logical spot to put your stop loss if you like to use stop loss marks as part of your risk management? Just above what? Yeah, many of you are saying just above the resistance. Makes sense. So you might, if you like a sell position for the pound to potentially give back some of this climb, if you took a market sell, you might put your stop loss just above that resistance. It respected this resistance, it respected it here and pushed down. So you might say, if I'm selling, if it breaks above the resistance and gets up here, then okay, I'm wrong. I'll take the small loss. But the potential, if it pulls back even halfway before trying to climb more, is that you could make a lot more than you're risking with a short risk to your stop loss above that resistance. Okay. And yeah, Walter, I understand you're saying the New Zealand dollar could be seasonally weak this time of year. I know a lot of dairy and different things are in that economy, and maybe this is a time of year where things kind of back off a little bit. But what we're looking at here, technical analysis wise, is a potential for at least a temporary pullback, and your stop loss could be up here. Now, Walter, if you think, no, I don't think it'll pull back, I think it'll break through, then what kind of pending order buys from a higher point? If it confirms you're right and it breaks the resistance, what kind of pending order could buy from right up here? Yeah, buy stop, exactly. Many of you are already on top of that. So I'm not here to tell you should think this should reverse and drop, right? I'm just showing an example of a resistance point already having been respected by the movement and a potential movement that's larger than what you have to risk to your stop loss on the other side of the resistance. Okay, and then you could set up for a buy stop up here if you think the opposite, or again, you could do a 1-2 move, which many times works out nicely. A 1-2 move meaning I'm not trying to guess. I'll take a sell because the resistance point tells me that's a nice spot to sell from. And if it breaks, I'll have my stop loss up here and I'll get in on a buy stop because the technical analysis strategy tells me if it breaks the resistance, then we may have a breakthrough candle like we see many times when a resistance level is broken. A breakthrough candle tends to, after it breaks through, continue to climb with a larger candle than you see otherwise. Okay? And we can point out lots of spots on the chart where that occurs, where there's an old support level that's broken, and when the support is broken, you have a big breakthrough candle that runs, and vice versa if it's going up through a resistance. Okay? And I can show you an example right here. Support, 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 breakthrough candles right here. Okay, much bigger candle once it broke through than the prior candles. Okay, so very easy to spot, nice easy strategy. And you don't have to just go with the GBP New Zealand. That just happened to be the one I had there. Here's Australian New Zealand, right? The Australian dollar, same thing, climbed against the New Zealand. It strengthened Australian. It makes sense it would strengthen. Oil went up. Australia does deal with some oil exports. If China's doing well, what happens to the Australian dollar typically if there's good news for China? Yeah, it tends to go up. Who's the number one buyer of the number one export, which is iron ore out of Australia? China. Yeah, China, and then China again. So many times, as goes China, so goes the Australian dollar. Okay, so when you're seeing good news for China, this was an easy buy today. This was an easy buy today. Soon as you saw the uptrend, soon as you saw, let's say, this resistance point right here, you see resistance, 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 and then once this came up and broke this little resistance level right here and started an uptrend, and you saw the good news about China continuing, China, US, that's an easy buy right here fundamentally. And then you see the technical analysis of a confirmed uptrend when you're looking here and you're saying, wow, that's a breakthrough on this resistance right here, resistance, resistance, and here's the breakthrough. Okay, so that's an easy buy at this point with the fundamental news on your side. Many traders in my portfolio were buying on the Australian today, not just against the New Zealand, by the way, against the yen. We compare the Australian against many currencies when there's good news out of China, and you'll see it. Aruna, if you've ever heard the phrase, Aruna's asking if you can't see his question, how many indicators, technical analysis wise, minimum would you depend on for a move? You can see right now I'm depending on 0, right? Others might say they like to have 2. Others might have 3 indicators. Maybe you like the RSI and the stochastic indicator. Maybe you like Bollinger Bands and Fibonacci levels, right? Some of you are saying 3 maximum. One thing I would caution is I would say, have you ever heard the phrase paralysis by analysis? Okay, and what I mean by that is if you start to have too many rules, too many indicators, too many things on your checklist that you need to see be perfect before you make a move, you might never make a move, right? So sometimes you'll miss out on so many opportunities simply because you're waiting for such an alignment of rules that you just don't get in on the move. And I'm not saying you shouldn't do that, but sometimes it's better to keep things more simple. Okay, sometimes it's better not to, I agree, but many times you can find opportunities by keeping things more simple. Okay, and we've looked at some simple things today. We looked at gold. We said it's a downtrend with good fundamental news. We said, look, right here, it probably could drop, and then while we're watching it, it's dropping. Someone's saying they can't hear, so I'm just going to type a message. I'm just telling this person it's just that person. Okay, so they'll know to check their audio. Personally, I like price levels, and so I like Fibonacci levels and lining them up potentially with the price levels. Okay, Fibonacci levels are nice. I also like the stochastic indicator if you've ever used it. And if not, I'll describe a little bit how it works. The stochastic indicator uses some moving averages that look back at two different time periods at the same time. They look back, one that's looking back further through more candles to determine when something might be overbought and changing direction, and another time period that looks back a little less. And so you have a faster moving average and a slower moving average. And when these lines cross and commit to a direction, you tend to feel that the uptrend has swung and changed directions, or the downtrend has swung and changed directions, coming up from being oversold or coming down from being overbought. And so you might check out the stochastic indicator and Fibonacci levels. I like both of those, sometimes paired together. Okay. But again, I've found that it's easier to find opportunities that you like if you look at the basic news, the fundamental news, understand which way is the market moving in general. I like to say, find out which way is the wind blowing. And as we looked at the fundamental news, we saw in 5 to 10 minutes, the wind was blowing as positive news for the markets. We could have saw that earlier today as well. If we had an earlier webinar, you could have been in on a lot of these movements that occurred all day today. Just by simply looking at the general direction of the fundamental news, then finding your technical entry points with price levels. What do you think would have happened with RSI, with the stochastic indicators, when they were showing that the market was overbought today? And if you sold based on those indicators telling you it's time for the market to drop, you probably would have been losing. Why? The markets kept climbing. And so you get false signals many times on those indicators if you ignore the fundamental news, right? If you're ignoring the fact that the markets could have just kept rising today like they did, and you keep getting false signals every time they start to pull back a little, you know, your RSI, your stochastic indicator, your Bollinger Bands might be telling you, okay, time for the market to drop, and they drop a little and go back up to another high. Why did that keep happening today? Because the fundamental news drove it, right? So a lot of times those indicators can give you an idea when the market's turning, but you also should be able to identify false signals based on the bigger picture fundamental news to pair with those technical indicators, right? So this is something to keep in mind, to pair your technical analysis with or without indicators with the fundamental news to give you a better idea of which direction you prefer to trust the signals. We could touch on Fibonacci indicators maybe next week. It's something I could do. I encourage all of you to come back. We'll take a look at Fibonacci levels next week. There's another platform I like to use for it. I don't like the Fibonacci levels on the MT4. We'll use a platform maybe called tradingview.com that I've used in the past. And there's some nice tools on that platform, especially a Fibonacci tool that I like to use that we could take a look at. So yeah, we could take a look at that. So by the way, looking at the Australia, New Zealand right now, do you see a potential opportunity? Look at this. Reversal point here. Last time it hit here, it plunged. This time it hit this level and broke through a little bit. You see that? It broke through. This wick broke through that resistance point on the Australia, New Zealand. So we might look at the bigger picture and say, 1 hour candles, where are we at? If this breaks above, say, this point here, if it breaks above this resistance level here, this could be a potential spot where you're saying, wow, there must be some upward momentum again, right? It's been quite some time since it's gotten up in this zone up here. So just because this is at a high point, it doesn't mean you have to sell, right? So if you feel the New Zealand has reason to stay weak, then you can say fundamentally you don't believe in this resistance level and you think it could continue to climb. So you might wait for confirmation that it breaks through by enough and have a buy stop waiting here on this Australia, New Zealand. Okay, so this looks like a potential opportunity right about here as an entry point for a buy stop if over the next day or so it breaks through this resistance level. And so I like to refer to these kind of trades that might not happen right now, right? This might pull down a little bit in the short term before it breaks up through here. Especially, what do you think happens if more good news breaks out about US-China? What do you think happens with this resistance level? Look, it's breaking through as we're watching it. Okay, if more good news comes out about US-China, it could easily break through and make a run like we haven't seen in some time above this level. So I refer to these pending orders that are up here just waiting, just in case that news happens, just in case the breaking positive story happens that's good for China and then is good for the Australian in turn, and you have a trip line up there in the market, just waiting to trip your trade, putting trip lines at ideal locations in the market where you think it confirms that a continued movement should occur. And many times those trip lines, you might forget about 3 days, 4 days, next week, and then boom, you have it kick in and you're in the market on a surge in the right direction potentially. Okay, and that's what technical analysis can do for you when you're pairing it with the potential for fundamental news that you know could happen. And right now, the huge potential for Australia, why I'm talking about Australia, is China. Okay, it's China. Koyman, I'm glad you can hear now. It must have been the audio on your side and you must have figured it out. Okay, so what have we looked at thus far? We've looked at huge potential for the Australian dollar to climb if there's continued good news for the US-China situation. We've talked about huge potential for pullbacks on some of these as well if the news turns. Now we've got crude oil, okay, took quite a climb. Why do you think the Canadian dollar climbed today? Why is the Canadian dollar still looking like it's trying to break through potential resistance right here? By the way, that's textbook. Yeah, because oil climbed, right? What's the number one export, the biggest export for Canada? Biggest GDP export, yeah, oil, right? The Canadian tends to respond to oil more than the US, even though the US exports more oil than Canada. The US is more balanced. They have a lot of other exports, auto industry, all kinds of things, farming industry. So oil is big for the US, but it's not the biggest thing, right? For Canada, oil is the biggest thing that they export. So when oil goes up, a lot of times the Canadian dollar goes up. So this was easy today. Pair the fundamentals. Here's the resistance. As soon as you saw that resistance break and you saw oil was going up, boom, easy buy. Could have been a buy stop pending or a market move. That was an easy climb here to trade on the Canadian JPY for the last 4 or 5 hours. Easy move. Pair your fundamental with your pending buy stop right here, and boom, you're in on an easy climb. Easy move. One lot position would have paid really nice. Okay, or whatever size is right for your account. I'm not telling you should trade one lot. I'm just saying a one lot position would have paid nice. Take a look here. What do you think happens if this breaks through this resistance right here? And by the way, look how textbook that reversal was. It hit and paused. Why did it pause right here? Look, that was the drop-off point. This was the old support and then breakthrough, right? So the old resistance right here, old support becomes resistance right here. It hits that spot, and predictably that would have been your take spot profit today. For taking profit today, that would have been your take profit spot, if I can say that more clearly. Potentially, based on technical analysis, if you got in earlier today, you may have already taken profit at that first resistance level. Obviously, you wouldn't have had to have. You could have a different idea of where you want to take profit, but that's a logical spot where you could have technical analysis wise. So again, you could have a buy stop up here just waiting in case good news breaks again. If this blows through this resistance and hits up here, potentially it could keep climbing. Good question. There's a question that came up. Does it make sense to leave the position overnight, or does it make sense to close it? At the end of day, at the end of week, listen, especially over a weekend, when we're coming up, if today was Friday, you've got a long time period for fundamental news to break over the weekend that could work against you or could work for you, right? So it depends on your patience. It depends on your strategy. Are you in this for a bigger move? And you know, if you're already bought on oil today and you're in the money, but your goal was to come up to this old support level up here, and you're in it for the bigger picture, then it's okay to let it go through the end of the day and into tomorrow, and even if it was Friday through the weekend, if you have a bigger picture, more patient move, right? If that's your strategy. If your strategy is scalping more, taking the momentum of the day and getting out, then that's a risk for you to let it carry through the night or through a weekend, even more so. So there's no one right answer to that question, but it is something you should consider, that especially over a weekend, that's a long time period where news can break and the market's closed. And there's nothing you can do until that market opens. And if the market gaps when it reopens after the weekend, it could gap for you or against you. Okay, so that's up to you and how you read the market and how you read your own strategy. Certainly, you should take caution and understand the potential for that to happen through a weekend. Okay, and at the end of each day, that obviously the volume of trading goes down at the end of each day. You can get some erratic movements. Spreads can widen at night. You have to keep that into account, and then they tighten back up typically as the volume of trading picks up the next day. All of that you have to account for. Certainly, I think there's huge potential here with this setup. Okay, you could have a potential breakthrough here and get in on that. You could say, I'm going to trade down just to see if there's a pullback. Okay, you could be looking to trade down here. What you might do if you wanted to trade down off this resistance is wait for a downtrend. Is it downtrending yet here on the 15-minute candles? Do you see a downtrend started yet? Does anyone see a downtrend started yet to say, oh, I trust that resistance level and I'm going to trade down? Do you see a downtrend yet? Possibly. I actually don't see, technical analysis wise, I don't see a downtrend yet. I see consolidation moving sideways. I don't see a downtrend. So let's say you think there's going to be a pullback and you want to trade down. You don't have to guess right now. You don't have to just jump in and trade down. What could you do? Wait until there's confirmation of what? Yeah, wait for confirmation of a downtrend. Where do you see the first support level here? Not just one red candle, but don't you see a support level here? This was resistance. This was the last resistance point. Here's the breakthrough candle that we talk about, bigger than the other candles. Okay, resistance, breakthrough candle, support, 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 support. So if it breaks this little support on the 15-minute candles, it's not that far down, but at least you're waiting for some type of confirmation before you make your move if you're unsure, right? If you're certain, by all means, sell if you're certain it'll drop right now. If you're waiting for confirmation technical analysis wise, that confirmation could be this support level being broken, then you get in either with a market move or a sell stop. Okay, you could be waiting to see if this support breaks. Yeah, there are lots of different strategies of formations. You could see some people called an M. Some people are looking for a head and shoulders. Lots of different formations people like to see in the candles to make up their mind. In general, you have to get some kind of confirmation in your mind in order for it to make sense technical analysis wise. If you see that confirmation that you like to see, then maybe that makes sense to trade on a pullback. Good point. Someone just typed a point that sometimes the stop loss makes a potential profitable trade not profitable because it hits your stop loss, then it goes. What's the alternative to a stop loss that you could do? And I think we'll end on this point. Let's say you believe that in the bigger picture, the world economy is not great, and then all this upward momentum, there's going to be a pullback in oil, and you think there will be a large pullback. Let's go to the 1 hour candles. Let's actually go to the 1 day candles, okay? Let's say you're looking, and let's get rid of all these lines. No one's typed it yet. In lieu of a stop loss, if you're certain of one direction more than the other, but you know temporarily it could go the wrong way, it starts with an H. It starts with an H. Rather than putting a stop loss on a move that you believe in for the long term, in the short term, you could back that trade up with a hedge trade. Exactly, a hedge trade. So let's say that you believe, in this case, in upward movement in the bigger picture. Let's say you believe it's going to go up and challenge this high point on the 1 day candles on, in this case, Canadian JPY. Let's say you believe the Canadian JPY is going to come up here because you think oil will keep climbing, whatever your reason. And again, this is hypothetical. Let's say you believe more in climbing than in dropping in the bigger picture, but you also believe temporarily it could pull back the wrong way. But you don't want a stop loss on your buy because you don't believe that any temporary pullback will hold, and you think it'll climb back up eventually. So if you took a market buy right now, okay, let me just simulate this. Let's say I buy on the Canadian dollar, I don't know, a 1 lot position, and there, I'm in. And I say, okay, I'm buying on Canadian JPY, I believe it'll go up. Again, I'm not telling you this to do that. This is hypothetical. So if I say, all right, in the smaller picture, if it drops below this little support area here, if it drops below this breakthrough level, which became support, then I will temporarily have a sell stop to hedge any losses further than that. So I could prepare Canadian JPY, pending order, sell stop, and my sell stop could start at, I don't know, 82 to 82.30, 82.30 hypothetically, and then I put the stop loss on the hedge because I don't believe in the sell. I'm only putting it there to protect myself because I'm not putting a stop loss on my buy, because if the buy drops, I don't want it to close. Overnight, if it drops and hits my stop loss, I'm going to be mad if by the time I wake up, it went up the way I believed in it, but I missed the movement because it hit my stop loss and closed it. The whole point of the hedge is so I don't have to put a stop loss on that buy position that I believe in more, so that it won't do that. So it won't stop me out, then climb. So I have a hedge position and I put the stop loss on the hedge so that if it drops down, triggers my hedge, I'm covered if it keeps dropping. But if it goes back up, that scenario where it would have hit my stop loss and then gone up, and I don't have my buy open anymore. Now my buy is still open, and what it does is if it goes back up, it closes my sell. It closes my hedge. My buy position is there to keep profiting. So I put the stop loss back above the support that it broke, maybe 82.35, 82.40, something like that. And I place the hedge position there. Now I'm protected. I don't have a stop loss on my buy, but I'm still protected with my hedge position. Okay. With this scenario, you just got to keep an eye out. Once the hedge position is activated, you got to make sure if it goes back up and hits the stop loss on the hedge, that you back that up with another hedge position, right? And I can back up a second hedge position now, just in case it went down, activated my hedge, went back up, hit the stop loss on my hedge, then came down again, I'm unprotected again. So I can put a second hedge position down at the next support level, just in case, right? Pending order, buy stop. And my next hedge position could be down here just below this support level. Okay, you get the idea? I can have two of them, two layers of protection. And the whole while, the stop losses are on the hedges, not on my buy position if I believe in the bigger picture in my buy position. Okay, and by the way, I can take profit if my first hedge position drops down to that next support level. I can take profit on the hedge. Now, if it even goes halfway back up, even though my buy is in the negative, overall in the two positions, I'm up because I made more on my hedge than I'm losing on the buy because most of this drop, I was breaking even. Now, if this goes even halfway up, I'm up, even though the buy is overall negative. So that's where you get into the idea of winning on a trade set, not on an individual trade. You don't, in the end, have to have been right on your first move. You just have to profit on the set of trades. And many times, traders who understand this idea of a trade set will close the initial position that they opened and believed in most. They'll close it at a loss and still walk away profitable because I profited on this drop. And if it even went halfway back up on the buy, if I closed at that support level, the hedge, the sell, halfway back up, I'm in the negative on the buy, but in the positive overall. Type okay if you're with me on that, on all aspects of that, or type your questions if you want anything repeated. Meaning the hedge position, number one, the fact you can have a second hedge position prepared in case it breaks the next support level. You take profit on the first hedge at the support. If it breaks that, you activate another sell stop. Okay, it looks like most of you are okay. Bahola, if you have any specific questions about the hedging, please ask. I can repeat. The idea is it's a backup. It's an alternative to the stop loss and usually makes sense if you believe in the initial direction more than the other direction in the bigger picture as a long-term move. And you can take profit on the hedge as it goes the wrong way for your initial position, giving yourself a chance if you take the profit on the hedge that if it goes back, now you're not just breaking even, you're making back what you lost on the buy. Okay? And still, you can put a second hedge if you take profit on the first in case it continues to go the wrong way. Very nice way to work, especially if you believe more in one direction over the other. Okay, let me just get rid of these hypothetical trades. Okay, so, but in general, why did the Canadian climb today? It was very predictable because oil was going up. That helped the Canadian dollar be bullish. Okay, why strategically might you pair the Canadian against the yen in this circumstance? Why pair the Canadian against the yen and not the USD in this circumstance? Oil was going up, therefore you think the Canadian should strengthen. Why is it better in this circumstance to pair the Canadian against the yen and not the USD? Yeah, the yen is a safe haven, which should be weakening like gold. If there's good news causing oil to go up, right, causing gold to drop, then the yen likely could drop as well because it's a safe haven currency. It's a safe haven like gold. So pair the Canadian, if you think the Canadian will strengthen as oil rises, pair it against the yen, which you would expect maybe to be weakening. Why would we not pair it against the USD today? Yeah, the USD was strong with the China news, right? The China news was good for the USD. So why pair two strong horses against each other? Isn't it easier to pair a strong horse against a weak horse? So you have to start thinking about your pairings as well. It's not just about, hey, oil went up, so trade with the Canadian. It's also, what do I prefer to put the Canadian against? You know, you could pair Australian Canadian. Why would that not have made sense if you're going with the Canadian? Because the Australian was strengthening with the China news as well. So find something that makes more sense in your mind, that maybe I wanted to pair the Canadian against the yen and not against the Australian or the USD, right? Doesn't mean it wouldn't have worked, but maybe it wouldn't have worked with the momentum that the Canadian had against the yen, right? So these are simple things to think about before you trade. before you get into the trade. Now, the last question I saw that I think is important to answer before we end is, where do you take profit, right? And that question was just asked a second ago. Again, that's up to each individual trader. You know, sometimes you do partial closes, right? If let's say you were in on a buy position here, okay, today. Let's say you had, I don't know, a half a lot position and it rose up. And let me just do that. Canadian JPY, let's say I did half a lot buy, okay, there I bought Canadian JPY, and let's say I'm in profit right now. I'm up, I don't know, $400. And I say, okay, it's at the resistance, but I also believe that it's bullish and could break through. So I don't have to have just one spot where I take my profit. Can't I do a partial close? You could take the whole thing and then prepare a buy stop, and if it breaks through, get back in. Or you could say, listen, I don't want to get out of the market completely, but I'd like to preserve some of my profit. So I could come in here. I could say, okay, let me change this to market execution. And again, let me show you. I'm modifying the current position. Let's say it's in profit that I like. I go to market execution. Let me change it from half a lot to 0.3. Maybe I'm going to take 0.3 of my half a lot. Okay, so whatever I put here, if I go to close, it's going to close that amount of the trade. So that's one way of compromising with yourself. If you reach that first resistance level like you see here, but you say, wow, it's still uptrending. Should I close it? Shouldn't I close it? Well, okay, let me close part of it. Boom. Now instead of having half a lot open, I only have 0.2. So now I just took, 3/5, 0.3 out of 0.5 of my profit, assuming I was in profit and not doing a hypothetical demo move, assuming this climbed today and I was in profit with it. I just took, I don't know, 3/5 of my profit. Now, even if it drops all the way back down to my stop loss, I profited. I took more profit than I'm risking at this point. And so, and I'm also still giving myself the possibility, if it breaks through, I'm still in on the move. Okay. So that's one way to determine where you take profit is look at the price levels. It's hesitating at the resistance level for a reason. It stopped climbing right there. Not coincidentally that's the last resistance level. So you can do partial closes. You could close the whole thing if you want. Where's my next spot where I might take profit if I believe in the bigger picture the Canadian will keep climbing? I left part of it open. Where's my next spot? Logically speaking, maybe the next resistance level up here. Support, breakthrough candle, like we've been talking about, bigger than the others. If this breaks through and keeps climbing, logically speaking, that might be the next spot where it pauses, where I might say, okay, I'll close the rest of my trade. But again, that's up to each individual trader, where you think it's right to take profit. But certainly what's important for every trader is before you open the position, you not only know where your stop loss or your hedge position might be, where you'll get out if it's going the wrong way, but you should know where you're going to get out if it's going the right way, right? And Ruben, exactly. Another example, you could use a trailing stop. Maybe I say, listen, I don't know how far it'll go, but I certainly want to stay in as long as it doesn't go back much further. So I could right click here, go to trailing stop, and I can pick how many points I want or do a custom amount of points and say, if it goes back that far at any point from the high water mark, then close. That's what a trailing stop does. If I put it 100 points back, if it keeps climbing, the trailing stop follows it and stays 100 points back. If it ever comes back that distance, then it closes and preserves the rest of the profit. So that's another option. Instead of doing a partial close, you could add a trailing stop, or you could do a little of both. But the idea is have this plan enacted in your mind before you open the position. Not to say you can't be flexible if market conditions change. If the fundamental news changes, you might say, okay, I'll change the idea. But at least know what your plan is before you enact the trade. That typically results in better outcomes. Okay? Very good points, very good questions. By the way, if you do a trailing stop, okay, let me click on 75 points Okay, that's 75 points back. I look, it doesn't show my trailing stop here. But if you look here, you can confirm it's active. You see right there, see the check mark. It's on 75 points. So I know the trailing stop is active. What will happen if you log out of the MT4 platform? Will the trailing stop stay active if I log out? If I lose internet connection, does the trailing stop stay there? Correct. No, it does not. The trailing stop is client side, not server side. It's not on our side. So you have to stay logged in for the trailing stop to stay active. So if you're utilizing a trailing stop, back that up with some other risk management, a hedge trade further down, or a standard stop loss a little further down, so that in case you lose internet, in case you lose connection, and that trailing stop disappears, you don't want to be completely unprotected. Right? So have a plan for if you lose connection and the trailing stop disappears, that you have something else backing it up. Because understand the trailing stop is only client side. Okay, I think we'll stop here. We've been going for a good time here. I don't like to do overkill. You can see there's a lot of movements that occurred that were predictable today, and they're also setting you up for potential either large pullbacks or breakthroughs. Okay, the breakthroughs could happen just as much as the pullbacks. It all depends on the fundamental news. Let's not pretend we're Nostradamus and we know what the fundamental news will be through the rest of the day and tomorrow and the rest of the week. So prepare for either. Prepare for breakthroughs. Prepare for pullbacks. And understand you don't have to be right on every move. You only have to be right once. If you're making 3 or 4 times being right, then you are risking when you're wrong. Okay? It's all about potential. It's all about getting in at your spots that you think make sense, having potential for large profits, and controlling the risk on the downside. All right, everybody. Thank you for joining. I appreciate all the participation. It really makes the webinar go better and becomes more informative for those attending, because there are things I wouldn't have thought of sometimes. There were nice questions today, and we covered some things that I think were helpful for other traders. It forms a nice community when you all are participating like today. Thank you for joining. Good luck with your trading. Lots of good opportunities here I think you all can take advantage of. And I wish you all nice profits moving forward. There'll be webinars tomorrow and Wednesday as well. So please join if you can. Bye for now.